Hey guys, it's Bitcoin Schmitcoin here with another update for Bitcoin Magazine's video analysis. We'll, of course, start on the monthly, move down to the weekly, briefly touch on the daily, and spend most of our time on the 4-hour range because the intraday volatility is where all the excitement is for the last few weeks. The only thing I want to touch on is this monthly level outlined here, which at the time of our last video, we were sitting right on it, maybe even a little bit below it down in this dash line, and we are fighting for support. When we move into the weekly level, we can see that that monthly level outlined here by monthly level is and with a nice confluence of this weekly support. So we can see that this this volatility over the last week had us coming down, testing multiple levels of support, and so far it's hanging. So we tested this monthly level, tested this weekly level, tested this monthly/weekly level, and now ultimately we're sitting right above this monthly swing high. When we look at the daily, we of course see a little bit more resolution on the subject, but what I want to shift our focus on here is that we actually closed yesterday's daily candle above this swing low, and we did it on a relatively high volume. So we can see that we had some nice stopping action on our swing low here. We see a nice round of buys step in, and we had nice follow through the next day. When we look at our 4-hour time frame, this is where things start to get really interesting. When we did the video on Wednesday, we were sitting right in here, and I mentioned that this trading range, which is outlined in blue here, all this stuff here, if we were able to hold support in here, we would most likely see a quick retest just below the trading range. And if we can get shoved back inside, what I really want to see is a high volume, high spread rejection of the lows and a rally to the upside. And that's exactly what we're seeing right now. So we saw this high spread rejection of the lows here. And what do you know it? We see a high volume to accompany our high spread. And we're currently hanging just above this swing low here. I have a little bit of Wyckoffean analysis labeled on my trading range. You don't need to know any of that. Only thing you need to focus in on is this descending channel, which I have outlined in red here. It's this whole thing moving downward here. We're currently in the process of testing the midline, which of course is a nice confluence with this preliminary supply that we have here. If we can get a nice clean shove on high volume, high spread, I want to see this market push above this yellow. And if we can hold support there, I think we're most likely going to see not only a retest of this supply and demand channel, but a retest of this upper region of the trading range. This high spread rejection is symptomatic of a market shakeout, which is bullish. As we trended down lower and lower and lower, we stacked shorts on top of shorts, but we can see that the move down was actually on diminishing volume. So we can see that we did see a couple of high volume bars, but overall the trend was not, expanding. We weren't seeing anything like that. We were seeing contracting volume. We saw contracting volume, and then of course this nice explosive shakeout, which had very little follow through when we look at this little range we created there. So we had this explosive bar. Very little follow through down here. And then, of course, we saw this rejection right here. And then a nice follow through, which really showed some sign of demand in the market, which pushed us back above the swing low. So what I really want to see for a nice, confident, bullish take on the market is a high volume, high spread continuation of our uptrend, which pushes us above here. And ideally, I'd like to see us above this midline here, but even just a push above this yellow region here is a very bullish take. We can see that we had a swing high here, a bunch of swing lows here, so it's a particular point of interest in the market. However, if we can't manage to muster up the demand to push us above here, well, then we're going to be looking at some lower lows here, because this is going to be the deciding ground. This midsection of the trading range is going to be the deciding ground for the trend. If we get rejected here, it's going to be looking pretty hairy. So if we get rejected at our current level, which is this guy here. Then we're going to be looking at most likely a test of our next swing high below us, which is this $8,800 level, maybe even a dip down to the 83, 8250s-ish. But for now, things are looking very bullish. I really like this rejection of the lows. I like the volume on it. I like the spread on it. I like how even after the rally, it's seeing a pretty weak rejection on the turn here. So I'm kind of expecting this thing to be pushing back up. And again, I want to emphasize this here is I want to see the quality of the rally show some confidence. I want to see some high volume. I want to see some high spread. And at this point in our trading range, we really shouldn't be seeing a lot of supply hitting the market. So if we see a rally that pushes up and hesitates, that's going to raise some red flags and possibly even show a sign of weakness in the market. That's going to have us pushing to new lows. But as it stands, this is looking very bullish. Just keep an eye out for the interaction with this level here. And of course, if we break down from here, then that's not going to be looking too hot. So keep an eye out for the 8250s, 8500s, because that's going to be the next level of support.